Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Joyce, managing director on Nasdaq's market intelligence desk, for an update on technical levels to watch in the Nasdaq 100. We're also going to take a look at other key areas in the market, such as the dollar and Bitcoin, of course. Brian, I want to start with the Nasdaq 100, though, and it's not just that particular index, but it seems as if any time the market is trying to stage somewhat of a comeback, just getting these sell-offs into the close, it just can't hold these rallies here.
Completely agree, Jill. We've certainly, for some time now have transitioned from the, buy the dip to sell the rip. And, midday rallies are being faded, and especially in the last few weeks, haven't had much of a bounce at all.
So let's pull up your first chart here of the Nasdaq 100. It seems to be we keep getting new areas of support. And, so what are you looking at here?
So right now, this is just the daily period chart, and you can see, last month, early April, we stalled at that 200-day. We're rolling over, and the last week, especially, it's been pretty much straight down. So to filter out the noise, we'll go back, zoom out to the weekly period, and we can see that since the first week of April 8th, we're down 6 straight weeks in a row. I think maybe 8 or 9 is the record string of consecutive weekly declines. So last week we were looking at the 12.2 level. That was where we were saying it was the next potential support. And this week we're knifing right through that. So it really wasn't much of a support level at all. In this environment, we're seeing almost everything selling off. We're even now seeing, the defensive stocks trading down. The only sector this year to date in the green is energy. So from here, I'm not sure if it's going to continue to be a straight line. I don't think anybody knows for sure, but the next expected potential support, we would say, is down closer towards that 11,000 level, which was a pivot low back in December of 20. And just below there is 10,700, which is where your 200-week moving average is. So I think around that 11,000 level, based on the lows from late 2020 and that 200-week, that would be where I would look to see the next expected potential support level for the Nasdaq 100.
Yeah, Brian, I just feel like the conversation is really centered around, okay, is the bottom in? And of course, it's impossible to pick a bottom, but even more so, it feels as if the market is still waiting for that capitulation point. We haven't gotten that significant pop in the VIX that traders are looking for. So what are your thoughts there? Are we, fundamentally, we know what's happening under the surface. Equities are down, bonds are down, crypto's in panic mode. However, the US dollar is up, and that's not necessarily the best sign, either. It makes things more expensive, particularly on the trade front.
Yeah, the dollar has been, running higher here. As far as capitulation in the marketplace, so just to move away from the Nasdaq 100, if you look at the Dow Industrials, this had been in the sideways range for quite some time. Only in the last week or so has it really broken down meaningfully from this, almost, let's say, 11-month, support level that's been in place since June of last year. So if we're looking forward, for that rotation, what's going to be the next stocks that take us lower? We know, the small caps and mid caps kind of led this decline, particularly the growth versus value. Now we're seeing the large caps decline, and particularly a lot of those large cap growth stocks have seen some meaningful moves lower. We're now seeing, more of those blue chip kind of stocks that are moving down as well. So the S&P this year, it's the Dow Jones. We're now just seeing them breaking down below their key support levels as well. So, when I'm looking ahead as to what is, the pain trade, or where we can see the most selling, like this year's S&P 500, this looks to be just breaking away from its consolidation as well. So, and its 200-day moving average is down at the 34.75 level, which is probably about another 200-week moving average, I should say, probably about another about 9 to 10% from here. You mentioned the dollar, Jill. The dollar index here. What's concerning to me is that this is actually now breaking out this week. This is a weekly period chart from these prior highs from 2020, which we see up around the 103 level, and then going back to 2017, which is up around 104. So when we see this dollar breaking out here, this has the potential to be a false move. We'll see if there's any follow through, or if next week this this breakout can hold. But if it can't hold, then this could have potential to run higher. I would be less concerned given the prior sharp move to the upside here. The RSI is already up at 82 on the weekly. That would be a significant amount of strength to continue to push this higher. Rates, on the other hand, are hitting a similar resistance level from 2014 and from 2018. This is the long 10-year yield. We peaked this week up at 320. The prior highs have been in the 3 to 3.25 range. So this has the potential here to be a top. And again, going back to the dollar, I'm just wondering if that's going to be somewhat of a false move. But we'll have to certainly wait and see how this plays out.
And
very hard picking tops and bottoms in this environment.
well, of course, I mean, picking tops and bottoms is always a challenging proposition. But Brian, I want to take a look at Bitcoin here too. Another market that has seen a little bit of panic mode here. What levels are you looking at specifically?
So we put out a note yesterday called Bitcoin Walking a Slippery Slope. And the reason why we did is we were focusing on this sharp uptrend here in late 2020, the exact same time period that we had a similar parabolic move to the upside in the Russell 2000, which is a pretty rare move for an index of 2,000 stocks. For Bitcoin, this instrument is no stranger to parabolic moves, but it had a 205% gain over just 10 weeks in the fourth quarter of 2020. And so when we look at volume at price or time at price, we measure that on the y-axis here, and you can see these gaps here, so that when an instrument then comes back down the other side of the mountain, so to speak, when we hit these volume gaps or these time at price gaps, they can potentially act as air pockets. And so my concern is that Bitcoin this week was, falling into this air pocket below 28.8. So roughly 28,000, 29,000 has been the low in Bitcoin since it had this major uptrend. So we certainly blew well past this high from January 21. We went up about another 60% over into November. But over the last 10 months or 11 months of 2021, the pullbacks established support around 28.8, let's call it 28 to 29,000. That's where Bitcoin bottomed on numerous occasions. So that is the key level going forward. I think we do want to see this hold. It did break it intra-week this week. Today was actually the low this week. And it's been able to bounce back so far. But I do think there is some risk that the current bounce back we're seeing late this afternoon doesn't hold. So again, very hard to forecast where price is going from here, but I do feel comfortable in saying that there is certainly risk that this zone below 28.8 down to at least 19.5, which is about the midpoint here, is a weak support zone.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.